Welcome back to another episode of Tech Talk Texas. Today I'm joined by Morgan Flager, who is the managing partner of Silverton Partners. Morgan, thank you for joining the podcast.
Thanks so much for having me, Matt.
And that is great to have you on. And for those who don't know you or have heard of Silverton Partners, I guess it'd be great to kickstart and give sort of a little intro and background to yourself and the business.
Sure, happy to do it. So I'm the managing partner of Silverton. Have been there about 20 years, so since the beginning of the firm. We're currently investing out of our seventh fund, and we actually have already raised Fund 8, so we're kind of like down to the last two or three investments out of seven, and then looking forward to continuing the mission. We've been investing in early stage startups for the past 20 years. Most of those have been in Texas with a pretty strong focus on Austin. So 60-ish, maybe 65% of the capital has gone to work in Austin. The rest is kind of distributed across the US. So we have investments in California, Bay Area, LA, as well as Chicago, Miami, New York. So pretty broadly distributed. And we're pretty diverse in terms of the things we invest in as well. So we do a lot of agentic software these days with a kind of focus on some vertical applications, but we also do health tech as well as fintech. And we hired Kristen Dumbeck about a year ago. She heads up our defense tech practice, which is a new area for us. So pretty diversified within that. And then we also have an opportunity fund, which is more like a growth fund to support primarily our existing portfolio. So we're not just kind of the early stage check writers. We can continue to support those businesses as they develop later. And then personally, just super quickly, so I grew up in Santa Cruz, California, went to Stanford, stopped out, started a company called Whoosh, sold that to HP, and then was kind of first 5 or 6 employees at 2 other companies, Quintana and Ingrid Networks. Those both had successful outcomes as well. So kind of started as an entrepreneur and then kind of moved into venture capital and first moved into venture capital with FTV, which is a big allocator based in San Francisco and New York. With them kind of 2.5, 3 years, and then joined Silverton for the past 20. So that's hopefully a very quick overview to me and the firm.
Yeah, no, perfect. It's good to get insight. And obviously went down the entrepreneurial route. Originally had a few businesses and worked for sort of smaller stage startups. So that transition into, being in those environments to actually investing, what originally attracted you to start investing in startups?
Yeah, it's interesting. I mean, some people that I meet and kind of provide some mentorship these days, ask a lot of questions about like, well, how do I get into venture capital and like, what's a good journey? And, sometimes that journey is like, oh, go start a company, raise some money from VCs, have a successful outcome, and then transition in. And that's kind of like the path or one of the paths, a hard one at that. That's definitely not kind of how I did it. I had no interest in investing when I was in college or starting these companies. It was all about kind of being an entrepreneur and starting companies. Was very passionate about it. The venture businesses that I was in, with the exception of the first one, were all venture backed, so had quite a bit of exposure to those folks. But then at the last one, Ingrid Networks, John Callahan, who was kind of the managing partner and founder of True Ventures, he was on my board. And as that company was exiting, he kind of just said, "Hey, have you ever thought about, switching sides, so to speak, and jumping over to the investor side?" And I hadn't really thought about it, but I did in my network from Stanford know several classmates who had kind of gone that direction and kind of leveraged their networks as well as those relationships to kind of just do some work to figure out whether that was something that I wanted to get into. And, basically the feedback came back. It's like, hey, it's super interesting. It's very lucrative if you can kind of do it right. And it's really hard to get into. So if you're given the opportunity, you should probably just, take advantage of that and give it a shot. And so, I think my mentality back then was, hey, I was like 24, 25 or whatever. I'm a young guy. I don't know if this is for me, but it seems like it might be interesting, and I'm just gonna, give it a try for a few years and see how it goes. And as they say, the rest is history.
Yeah, For sure. And I know from our previous conversations, Silverton Partners have been investing in Texas before it's now known as this tech hub. So I guess it'd be interesting to find out, the journey and the reason for, backing a lot of Texas companies before. Now we're seeing a lot more heavily, but before it was the big thing.
Yeah. Yeah, when I was leaving FTV, which was like a fairly established firm at that point, and leaving the Bay Area, I was based in San Francisco at that point, to come to Austin, this was like 2005, 2006. I definitely got a lot of like interesting looks and questions. It was definitely not the in vogue or kind of, even remotely considered thing to do for kind of someone in my position at that time. And so the logic was, and some people do it because it's like, hey, I'm from Texas. I have family there. I really want to get back. Again, obviously that wasn't the case for me. I had been introduced to a gentleman by the name of Bill Wood, and he had started with a few other people, Austin Ventures, which is a big kind of firm based in Austin, for probably 20, 25 years, kind of before I moved down there. And then obviously I'd spent a bunch of time at that point investing in started companies in the Bay Area. And like, I guess my learnings which are pretty much, still true today, the best returns and the best outcomes in startups aren't evenly distributed. There is very much like a power law effect that goes on. So, the top, handful of percent of businesses return, typically 80+% of the returns. And typically like those top businesses accrue to kind of the blue chip firms that are kind of known as the tier one folks in that geo. And, although it changes later when, investing is very much like a national game, at the early like seed stage side where like the company may not even have revenue, it's just kind of an idea, even today with a more kind of distributed workforce, it is a little bit more local. Like you can't have, LinkedIn crawlers, looking for employee changes or, buy data sources that talk about user growth or revenue growth. If the company isn't even in market yet, you kind of need to have really good connectivity to the local ecosystem. And when I looked at Austin, really at that time, there were only a small handful of firms. Like Austin Ventures was the biggest. And the feedback was that there wasn't really anyone in the ecosystem that I would say had like established themselves as like the tier one go-to firm in that region. So that was super intriguing to me because I thought we could do that, with my background. And then Bill had, 20+ years of prior relationships. He was very well thought of in that area, and like me kind of bridging the gap knowledge wise and relationship wise between Austin and the Bay Area with my network, was kind of a powerful combination. And so the goal was really to kind of create that marquee firm in Austin. And even though that market, at the time was certainly much smaller, it's still obviously smaller today. Our goal was, hey, we're not going to raise billion-dollar funds. We're going to raise small pools of capital. We're going to invest in the very best businesses. We're going to create our name as a marquee firm. And, if we're not too ambitious and try to grow capital too much where we outstrip kind of our ability to invest in the best thing in Austin, we should produce great returns for our investors. And so that was kind of the goal and strategy that, kind of led me to make the jump and start investing in Austin. And, still today is very much the mission.
Yeah, interesting. And I think it's funny, right? Because I doubt you ever predicted when you first made that bet that Austin would quite go on the rise that has, 20 years later.
Yeah. Yeah, certainly didn't see it. Although, it was kind of a top 6 or 7 ecosystem at that time. And again, like all you really need as an early stage investor is, 2 to 3, with a small fund is like 2 to 3 good investments per year. And so like our first funds were like $75 million funds. We certainly found, that number in Austin. And the thought was like, hey, if Austin grows, we'll grow the team, we'll grow the capital base, and we'll kind of, make our fund kind of a fit for the opportunity set that we're seeing. And, obviously if you see, the growth from 75 to 175, and then the addition of an opportunity fund, it was really us more scaling to meet the demands, the growing demands of the area rather than, oh, we just want to make, more management fee this year. So we're
Yeah.
going to raise, whatever, another $30 million and we're going to dilute returns because of it. It was just kind of more of a reaction to Austin. So certainly didn't foresee it. Thought it would grow from what it was and thought there was an opportunity, but, in a lot of ways kind of got lucky that, we, kind of had the trajectory that we had. And in some ways we're a part of it, obviously, as kind of funding some of those seminal companies that kind of helped get Austin, more attention and build it up. Although by no means do we take credit for what's happened.
Yeah. And out of interest, and you must speak to so many founders that are moving to Texas and starting businesses in that entrepreneurial spirit is really thriving in the state now. So why do you think there are so many founders that are choosing to build in Texas now?
Yeah, so now there's more capital here. It's a more well-known ecosystem, so it's not so much of like, hey, if I go there, I'm going to be in this black hole where it's going to be tough to get attention and attract talent. So we're in a bit of a different mode now, which is great. We've always had good software expertise, especially B2B software expertise, as well as semiconductor expertise. I mean, that was the case when I moved down here in 2006. But it's so much richer now. So you've got SpaceX and Tesla here, that bring an interesting combination of, hardware skills, AI skills, as well as robotics and a bunch of other key areas, space tech, obviously. You've got a medical center at the University of Texas, which, healthcare technology as well as, pharma and that sort of thing are interesting areas. And then you have like a really burgeoning like defense tech ecosystem, which in some ways is kind of born out of the other things. So like if you're wanting to do, something with missiles or space, obviously someone with a background at SpaceX is quite interesting. A lot of those companies also employ robotics or computer vision, which again are talent that we have here in Austin. But you need more than that, right? You need, a government that's supportive. And so like what we've seen, especially on the defense tech side is, hey, if you have a government that's going to allow you to test things on ranches, outside of town, like that's super helpful and interesting. So you have a combination of like, a place to go do this, a capital infrastructure that's been really built up over the past, 20 years to support it, a good talent base in these broad number of areas. And then you have like very general things, which is like, yeah, there's no state tax in Texas, right? So as an entrepreneur, potentially having a big outcome, like that ought to be attractive to you. And then you've got a city that's young. It's a great city to live, outdoor lifestyle, great food, et cetera. It's certainly improved in some of those dimensions, in the 20 years that I've been there. And you kind of throw all that together and, it's kind of a pretty interesting place to be, especially if you're a 20 or a 30 something founder.
Yeah, for sure. I speak to countless founders that are looking to scale, and I think what's really good as well, the access to talent now, especially in Austin on the tech side, it is growing so much. It's become a city that people want to move to, a state people want to live in, and there's the companies there they can work for, which are exciting. And going into startups that maybe looking for funding and maybe struggling, what separates the startups that actually get the funding versus the ones that don't?
Yeah, I mean, a lot of the attention at an early stage goes to, founders who have like an interesting pedigree or background, right? So like, especially, and it's kind of a combination of two things. It's like, hey, you've done really interesting things at a fast growing company, right? And the theory there, which is probably pretty obvious, is like, these are hard environments, right? Like things are changing quickly. The needs and pressure of scale, are immense. So having dealt with those challenges successfully in the past, hired, managed under those circumstances are great. And hey, if you've gone through a tougher time, like one example might be, 22 through 24, 25, like obviously further back, you had the great financial crisis, 2008, 9, 10. So like, that's great experience that's hard to replicate as well. So we look for that. The other one is, background in an interesting area, right? So, in today's background environment, obviously there's a ton going on in infrastructure, especially AI infrastructure. There's a ton going on in defense tech. There's agentic vertical applications of AI across a number of industries. There's a ton of security implications that result from the interjection of AI into these areas. So like if you have background in an area that's of interest to VCs and seeing a lot of growth, that's really interesting. Like if you don't, it doesn't mean that there isn't possibility to interject and revolutionize like more existing markets. Like we look for that as well. But you kind of have to be a lot more selective about like, hey, what is the tip of the spear in the market entry that's kind of going to disrupt something that's been established for a while versus just slot into like a super high falutin growth market. And then the last one is just kind of like networking grit. And the reason why I mentioned those two things together is, hey, if you can find your way to someone that has a relationship with a venture firm or an individual partner at a venture firm that you want to talk to, that's going to help your chances of success. And, like, hey, if those relationships are falling off a tree for you, great. If you happen to have, classmates or coworkers or whatever, they can do that. That's awesome. But if you don't, that doesn't mean you can't do it. You may need to go through 2 or 3 degrees of separation and really kind of navigate your way there and be aggressive and try, 10 times before someone responds. And that's just kind of the grit component of it is like, hey, if at first you don't succeed, like keep trying. And, the keep trying also isn't like, keep trying with the same message having made, no forward progress. It's like, hey, if you try something and aren't getting traction, like keep going, continue to provide updates on, what's hopefully, moving forward and exciting and eventually hopefully you get traction and like, again, easier said than done. And these are hard things, but that kind of, passion and grit is a big part of it. I would say as much of a part of it as, having been at great companies and having a background in really interesting areas.
Yeah, for sure. I think leveraging your network so powerful because it's so rare you meet someone from Austin that lives in Austin these days. So I speak to a lot of people, they come to Austin, they've got a great product, they want to get investment, they want to be seen, but they don't have a big network to begin with. So if you
Mhm.
were, to go out there tomorrow, you move to Austin, for example, maybe for a founder listening, but doesn't have a network, what would you do to sort of go about establish that network and be seen?
Yeah. So, I guess speaking purely in Austin, I know this happens a bunch of other places as well, but like there are a bunch of like networking events, like here at Silverton, like we throw like a bags and brews event, which is just kind of like a casual networking event. We do it once a quarter as well as like several other events during the course of the year. And it isn't like a super qualified event in the sense that like it's not like our CEO dinner where you have to like have funding or whatever. It's just kind of like, hey, interesting founders that are new to town, that we want to establish a relationship with. Like it's pretty broad. You can show up. We take referrals from other folks that attend these events for us. So like if you're just networking in the startup community, find someone that has a relationship with us or has attended one of these events and request to go, like you're gonna you're gonna get an invite. So like, and at that times, all the other firms that are doing, somewhat similar probably things in town. So you got to get out there, meet people, network. But if you have a great product, especially in today's day and age, where there just doesn't you don't require a ton of capital to make really good forward progress with like most business ideas, right? Because there's so much leverage with the AI coding technologies today. Like the best thing that I can think of is like, hey, if you have a little bit of savings and you can do it on your own, great. If not, even raising like low hundreds of thousands of dollars from like friends and family and classmates who have done well and whatever, people who know you, to allow you to continue to make forward progress. And then I'm a big fan of like, okay, well, like, that forward progress, isn't really that helpful unless you're able to like market that to the people that you want investment from. And so, we've got, 5 partners and then a bunch of junior people that receive updates from a number of companies and they pay attention to them and they track them. And if someone's breaking away or, crossing like a barrier that's interesting or getting customer traction that's meaningful, even if it's on like a very small scale, like those are all like very strong signals for us to spend more time. And whether it's a partner or junior people, like getting more time if you're making interesting progress with the business, like I would argue isn't a huge bar to get over. And so like just never stand still, right? Like it's almost like a shark, right? Like if you're not if you're not swimming forward, you're dying. And so like, hey, if you can raise 10 million bucks and you can swim forward faster, great. If you can only raise 150 grand, like the pace might not be as fast, but you still need to be like swimming forward and hoping that you can kind of get the attention of the right person. And then if you are going to reach out, the only other piece of advice I'd say is like, do your homework, and like you can even automate this with some AI tools today, but like, I don't think it's really necessary. Like hopefully the amount of outreach you're doing there isn't like thousands of people, but it's like understand where they've invested before, where there might be synergies, like what style of deals did this person like to do, and then like make that a part of the messaging. Like, hey, I know you like teams that look like this, or like companies in these spaces. And I think it's really interesting for this reason, like even listening to podcasts like this of people that you want to attract capital from, like there's a lot of information in there. And so, yeah, do your homework, and, like any sales cycle, that's going to increase your chance of conversion. And if you only have a few stones to throw, then, make sure they're not wasted.
Yeah, I think that's a huge thing, leaning off what you said, knowing your product, but also know how to present your product, know your market fit, know the areas and the challenges you're looking to solve, and then getting in front of the right people from that side. And going into, startups that they go through a funding round, where do you see mistakes happening, or what do you think is the most important process to go through after, going through a funding round?
Yeah, I mean, I guess we typically track the companies that we invest in for a while. Like I would say on average, it's probably 9 to 12 months. And, sometimes it's 6 weeks, but sometimes it's 3 years. And the reason why I say that is like people, entrepreneurs in particular, but, they have this impression of like, hey, I need to show this growth trajectory or this plan that's like super high growth, very quickly. We're accomplishing a ton of things. And so they put a plan out there kind of with the hopes of like getting someone's attention because of how aggressive it is. And, if you really believe that and like you think that you're going to hit that, 60, 70% of the time, great. You have a super exciting business and go put that forward. But a lot of people, they kind of, they try to be aggressive for the point of getting attention, and it kind of backfires in the way that like, we see that plan a year ago, and you're making progress and you're updating us, and we're kind of like tracking that against the forecast and the expectations that were set, and if they're falling short, it doesn't mean that like the business isn't fundable and like, hey, if you don't hit your, year one forecast, like we're auto out. But like there is a mental note of like, okay, well, like we should discount like the things that this person says because we've been tracking this company and like we were at 30% of like the target. So when they come in to present and they say, hey, well, here's what we're going to do next year, it's really hard for us to take at face value that like you're going to hit that, or like that those objectives are reasonable, because we've kind of seen that hasn't been the case. And then, like that's often, comes with some litany of excuses, right, as to like why that, that didn't happen. And in some cases they're legitimate, but like at the end of the day, like no one really, no one really cares, right? And so what I would suggest is, like, yeah, you want to present a plan that's like a lean forward plan, but like make sure it's something that you can deliver on, like build the credibility, make the forward progress. Don't feel like you need to show like a world beating plan, day one. Just kind of work it and build the credibility, because most of these relationships are a two putt kind of thing. They're built over time, and like don't try to, go too flashy and show it kind of all at once. It is okay, totally okay, by the way, to have like a big grandiose vision of what's possible. You don't need to show some kind of sloughed off plan where it's like, yeah, it would be okay if we end here, but I really think this is the vision. It's totally okay to paint the picture of like what you want to be one day and to be very excited and have that be really grandiose, especially if you believe that. Just make sure the near term is something that you really feel like you can deliver on.
Yeah. So having that ambition, but also being realistic with it, not trying to run away before you can for walk it and grow organically. And coming back to that, then typically go for a funding round. The next phase is going to be growth of a business, and sometimes to grow, you need to bring people in to a business, and obviously supporting a number of startups in that journey. What would you say are like the most important hires for these early stage startups to get right early on?
Yeah, I mean, there's usually a pretty like important hire. So like if the founder is technical, there's usually some kind of like a go-to-market hire that's like fairly early on in the life cycle of the company, and like vice versa. If this, the CEO is more of like a, marketing guy or product guy or sales guy, you're going to need someone to go actually deliver and build that. And so if you don't have that already as part of the founding team, and you're making that as a hire, like that's probably the most important like hire you're ever going to make. So you got to do a good job with that. And what I would recommend is like you've got to spend a decent amount of time with that person before, or like have very strong references of other people who have kind of been in the foxhole with that individual. Like you can't treat it as like a normal interview where it's like, okay, I spent 2 hours, asking you questions about stuff, and I did two references like you gave me, and like now we're good to go. It's kind of like I'm gonna back channel reference you, like we're gonna go on a trip together. I'm gonna have you in for like a multiple day case study thing of like how you're gonna handle this stuff. Like you really have to kind of make sure you spend the cycles there, because undoing that later is like very expensive because you typically wasted a bunch of time. It's usually expensive from an equity position because like what you're going to have to offer that person initially to get them excited is usually pretty hefty. So that's a super important one. Um, this probably goes without saying, but like I'm a big fan of like hire the absolute best people you can get, right? Like, and if you have to give up a bunch of equity to get those people, you should do it. Kind of as simple as that. Like in some cases, like their cash demands don't line up, and this may not be something you'll be able to do day one. But if you can kind of get them to take more equity in exchange for less cash, like you should do it. And people are very concerned about dilution, and I get it. Like that's what everybody's kind of working for, and it sucks to give that up, especially if it's your idea. But they usually vest over time, right? Like 4 years obviously is pretty typical. And if that person is still there in that role, or something approximate to that 4 years later, like they probably earned it, right? Because otherwise you probably would have parted ways, much earlier than that. So yeah, don't sell yourself short. Some people also, they have an apprehension about like hiring better people than themselves. Like this is always a tough one, because I feel like, they might be displaced at some point within the company, or they're going to look bad in comparison, or like somehow they're going to be exposed. And like, you don't want to hire someone who's better than you that like has the ambition of like, oh, like you can kind of tell they're like gunning for your job. Like that's not probably what you want. But what you do want is to hire someone who can kind of like make up for any gaps in experience that you might have, that is better than you in a number of areas, so that you can focus on the things that you're really awesome at. And so if you ever find yourself as an entrepreneur being reluctant on that basis, you really just need to do everything you can to get over it, because that person's going to pay dividends for you later, probably make capital raising easier, make the early performance of the business easier. And, it's kind of, slightly smaller piece of a much bigger pie kind of statement is appropriate for those kinds of hires.
Yeah, I think it's always worth looking at as a founder, where are my strengths and where are my weaknesses, and being really honest, and then bringing someone in that can, accompany you and work alongside you and really help grow, because the cost of a bad hire can have a real big impact, not just in the short term, but long term. And like you said, when it goes to raising capital, and if you're bringing people into the business, giving them equity, going to raise them for 4 years, for example, I think sometimes it gets overlooked of an interview process, maybe focused on, what can this person do for the business, but sometimes overlook what can the business give to that person, what can we do to, keep someone here for 4 years rather than get, disgruntled, leave, and it's back to square one. And again, so it's definitely crucial to get that first hire right.
Yeah, it's interesting. Like there's a story with a company that we invested in called WP Engine, and Jason Cohen, great founder, kind of serial entrepreneur. We had backed him, and he is an amazing product founder, incredible like bootstrap plus entrepreneur, like knows market opportunities, just awesome individual. And we're super happy to back him. The company was performing. He didn't have as much like go to market experience. Kind of some of the product led growth stuff, but not like kind of building a true kind of enterprise go to market kind of ecosystem. And we wanted to do that. And so I introduced them to this lady, Heather Bruner. And at first I'm like, hey, she'll just be a board member and you can get advice from her. And we did that. He was supportive. She's awesome as well. Like they developed this mutual respect to be on the board. And he's like, okay, probably makes sense to bring her into the company. So we're kind of like, hey, how about COO? That way she can do all this stuff that she's good at, that, you'd rather spend your time like advancing the product and really kind of building the leadership, the business. And, she was in that role for like 3 or 4 months and she was really excelling at it. And he came to us, like me and my partner, Kit, and was like, she should run the company. Like she's doing an amazing job. Everybody loves her. Like I'd rather focus on the product technical aspects. And like, it's pretty rare that you have a founder who like comes to you and just says like, hey, I have enough respect for this individual and I'm self-aware enough about my strengths and capabilities that I'm willing to do this. And it wasn't something that we were even trying to affect. It was just an observation that he had about how to make the company better. And we ended up making that transition. She's done a wonderful job with it. But I tell it because you kind of made the statement of like, know your strengths and weaknesses. And like, that's a hard thing to do. That's something that takes a lot of like self-reflection and kind of honesty and awareness. But if you have that, or you can develop that or listen to people around you who might be providing feedback along those lines, like, that decision, ultimately made Jason a ton of money and probably made his life a lot easier. So not necessarily to say that like how every entrepreneur should do this. Like some people are great and they should never turn it over. But if you have those inclinations, like those are great qualities to have as an entrepreneur because you're kind of putting the company first, putting the vision first and like kind of making a no bullshit decision of like, what's the best thing to do. And those are hard, but I always give a lot of credit to Jason for making that call.
Yeah, it sounds like a decision that really worked in his favor, in the business's favor. And that leads me on to my next question. Sometimes you have a founder that's their business is their baby. Sometimes they don't know when to walk away or delegate a task. They may try and take on too much, whether that still be hands-on technically, look at the marketing, the sales side, operations, and all of a sudden they find themselves a little bit trapped of doing everything they possibly can. Do you see that with founders when sometimes it's like you need to focus on what's best for you and get the right people in to support?
Yeah, I mean, I think nobody, even the most experienced kind of business folks, can kind of have clarity of vision across everything. And so one of the things that you really need to do is develop a board and set of advisors who can kind of be a sounding board for you. Um, so you can go to them and who are familiar with the business, right? And you can go to them and you could kind of ask like, hey, I've been having some concerns that like the second product area that we opened up it's taking too many resources. We're kind of like delivering at 50% across both things. And, that isn't a good thing long term. And like, what do you think about that? And then you get to leverage their experience, right? So like, now, I've had 4 or 5, billion-dollar outcomes and a bunch of exits and seen a lot of game film and right. And like, I might have a point of view on that that's different than what you may have as like a first or second time founder. And there are other people that have more experience even than I do, that you can leverage. And so I think it's obviously you should always be asking questions and critically like examining like, hey, are we spread too thin? Do we need more resources here? And in some cases, like your own intuition and experience will be like, oh, that's obvious. We should do X, Y, and Z. In other cases, it may be like, hey, I think this, but like I'm not really sure. And you need to take that to, board members or advisors and like ask. And like with the full context of information, like some people tend to clam up because it exposes some potential weakness, like in the business. And like, I don't want to talk about that because it makes me look like I messed this up or, that the company isn't capable in this area. And it's like, yeah, I get it. But like, if you brought on the right board members, like you're not really concerned about that because like, we're all on the same team. We're all trying to make this business better. And like, I can't help you solve a problem unless like, I know that a problem exists. And like most of the time, I'm not going to know it exists unless you're like transparent with the information. So lean on, those trusted like board members and advisors to make the right decision, because I would say, there are at least like 15 or 20 of these like really important decisions that are made with startups in the first like 2 or 3 years. And a lot of them have to do with like, is now the right time to scale? And like, are we doing too much? And do we like focus and scale? I tend to feel like are like tend to be like the really critical decisions. And so when you're asking those questions, like, hey, are we hiring too quickly? Or are we not hiring quickly enough? Or, there's opportunities for us in 5 areas, but we're only doing 2. Should we add 1 or 2? Or like we're doing 3 and it feels like we're overwhelmed. Should we only be doing 1? Like those are the questions that you really need to leverage, folks that have a little bit more distance from the business to get the best perspective. And you don't even have to like take their advice, right? At the end of the day, right? You can hear what they have to say and you can ultimately decide that that is slightly uneducated or stupid or, not informed enough or whatever and do your own thing. But like the mistake of not hearing the advice first, I think is a big one that some folks make. So.
Yeah, I think it's interesting because I know we've spoken a lot throughout the podcast, leveraging your network, building relationships, and that's a topic that keeps coming, relationships, using people to, effectively help you come to the right outcome and decisions. Do you ever find founders that may be a little bit hesitant to leverage relationships, take advice, support, maybe a little bit stubborn?
Yeah, I mean, there's a couple causes and like some of them are like justified, right? Like if, the board member like is like super critical, doesn't really like help that much at the end of the day. Just kind of more uses every opportunity to like, throw shade or whatever on the business. It's like, oh, well, of course, as a founder, like, why would I want to, bring problems to that person? Because I don't really get much help and I get criticized for it. And so like in some cases, that, or someone as a board member, it's like, hey, I thought I was raising capital from someone who really knew this area or knew business really well, but like, I wasn't able to attract capital from that individual. And so I've got someone who may not have as much experience as I want. And so like, their advice isn't as helpful. So like, there are reasons why that are probably good reasons why that doesn't happen. And then there are other reasons where it's kind of more akin to like what I was talking about before, which is just like, hey, I'm a bit scared to show the soft underbelly, of the business or to show faults that that happened in decision making. Like, hey, I made a call 6 months ago and it doesn't look like that's working, and now I kind of want to ask advice, and part of that is admitting that that was the case. And those are things where it's kind of like you need to have trust, especially where trust is warranted, and you need to lean on others, because like being a leader, it's hard enough. It's lonely at the top, as people say. But it doesn't need to be any lonelier than it absolutely has to be. Like you have to lean on those people and like cultivate enough trust to be able to go to them and like those hard circumstances and decisions. And so, we find that like, a lot of times like our more experienced or better CEOs, like they do that a lot. And again, they don't always take the advice of the board, but they aren't afraid to kind of go out there and ask for it. And I think, in at least a smaller number of cases, that's really paid dividends for them because they learned a thing or two.
Yeah, for sure. And going into sort of growth areas, and I know we discussed sort of tech CS, you have the AI boom that's coming forward, you've got robotics and that's thriving in Texas, autonomous vehicles, healthcare, defense, all growing areas. Where do you see sort of the most growth right now happening across the state?
Yeah, I mean, I think the two like fastest growing, like as a percentage wise, areas within kind of the tech ecosystem in Texas are like energy related and defense tech related, and space tech and defense tech in some cases, are kind of overlap in some areas because obviously like defense has a lot of interest in space. So those are probably, and the reason why, they're certainly not the largest. Like the largest is still like traditional like enterprise agentic, software and functionality, but they're super fast growing because, obviously the energy needs with AI are extreme, and like, the energy startups tend to be playing into like new power sources, like better distribution of power to power kind of this huge infrastructure requirement that's out there, a super fast growing area. This administration has also on the defense tech side kind of realized, our pace of innovation is too slow and too expensive. We need to embrace kind of what America is amazing at, which is like entrepreneurship and starting businesses and innovating. And we need to incorporate that into kind of how we, build and develop on the defense tech side of things. And because that was pretty nascent and small before, percentage wise, like that industry is growing super quickly. And for the reasons I stated earlier, Texas is super well positioned on the defense tech side, also very well positioned on the energy side, just because of how much of a energy magnet and producer, Texas is already, and our grid system and like how that functions. And again, our regulation and like, how supportive in general, like our government is to kind of trying new things and being very market based. So I think that positions Texas like very well in these kind of handful of areas that are growing. But I also believe that, a lot of the legacy, SaaS enterprise software DNA is finding its way into super interesting, like AI powered agentic applications for various like business processes that are super compelling. And we continue to invest in that, which is, I would argue, still like Texas's biggest strength.
Yeah. And out of interest, then obviously you have a front row seat of the ecosystem, the scale ups, the startups. What excites you most about the future of Texas startups, and where do you see it heading?
Yeah, so these areas that we've been talking about, you know, energy, healthcare, defense tech, like I don't really see these areas like slowing down much in the future. Like I think they're very high growth areas, and I think Texas is going to continue to get stronger. So like if you were a defense tech startup CEO or founder 7 years ago, like there's no chance or very little chance that you would end up in Austin. Like it wasn't well known. The talent pool wasn't here. All the expertise from, Tesla and SpaceX and all these sort of folks, like that was super nascent or non-existent. And now I would argue like Austin is probably number one, or if not number one, like a very close, like number two ecosystem nationally for defense tech. It's almost like, hey, and growing much quicker than anywhere else. And so like, hey, if you're going to start that style of business today, like there's probably like very little chance that you end up anywhere else, aside from Austin. And so, unfortunately or fortunately, I guess in our case, like once you establish yourself at elite as a leader, that tends to snowball, and like the strong get stronger. And I would say the same about energy. Texas just has like so many advantages. Because of like the legislation and the geo and the proximity to the big energy producers, and, the land availability and all the other kind of in the grid. So I think we're going to continue to get stronger in those areas. And then just generally, and you've seen this with like some of the, recent moves, like David Sachs, like our tax environment and situation is like so favorable. And as like other states and ecosystems, who are already not tax friendly go even further to make themselves less appealing. Like I think that just continues to squeeze talent towards places like Austin and Texas. And not only from an entrepreneur standpoint, but from a capital standpoint, like those folks have similar calculus as far as like where they want to be. So I think that just kind of continues to make Texas stronger. Also, interestingly, from a political standpoint, like it's a very interesting mix. So, obviously Texas is a Republican state. Austin is a very liberal city. And I think that balance actually works super well. So no matter what your affiliation, as an entrepreneur or from a business perspective, you can kind of find your tribe and find your group here, and it feels more balanced than some other places. And hopefully, like we move together more as a country, and that becomes less of a big deal. But to the extent it doesn't, I think you'll find more, collaboration and understanding within Austin than you might some other places. And like that's, I think, a positive attribute of you're a founder or just like a person of an area. Like, hey, where do I want to be and live? Fits really well. And then, as much as people talk about Austin cost of living going up, and I've seen it, like I've been here for 20 plus years. You can still buy a house for like 350, 400K that's like super nice within like a 25, 30 minute drive of like downtown Austin. And if you look at every other tech hotspot, like that doesn't exist. Like if you want to find that kind of, and I'm talking about like a, 4,000 square foot, newly built, nice house, not like, some, 1,500 square foot thing, that's got a dilapidated yard that was built 50 years ago. And that doesn't really exist in any other tech ecosystem. So if you want to be part of like, building wealth, having slightly better quality of life earlier on than you might otherwise, like I think Austin still will present well. So I think the combination of those things, allows us to continue to thrive and flourish. But we'll see. We'll see kind of how it goes.
Yeah, I think it's interesting when you touched on the community aspect, the whole slogan of "Keep Austin Weird," and going back to you don't really meet a lot of people from Austin, so there's people all around the globe, different cities, different continents. So it's such a diverse group. So it's always, like you said, your tribe's out there somewhere. It's always good to get out and network, and people are super open to networking and building a community here, which I think it's a great place to be. And Morgan, final questions for you. So it's not tech related, not VC related or startup related. It's a question I ask all my guests. Obviously, Texas is known for its barbecue food. There's a lot of debate which is the best barbecue spot. Where would you say number one, number two barbecue spots are in Texas?
Oh man, that's a tough one. I'm, I'm probably like Leroy and Lewis and Franklin's with like, Franklin's like number two with like KG barbecue, like, which is different, which has kind of got more of an Egyptian, Middle Eastern flair, probably at number three. But obviously, a lot of great options to choose from. I do think if you look at barbecue, it's hard to beat Central Texas for the options. I'm out on vacation in California now, and I don't think I could find a barbecue place that matches like number 7 or 8 within 500 miles of here. But I'll do my best.
Yeah, that's a great top three, and it's funny. Not a lot of people I speak to have tried KG barbecue yet, and that was my number one top pick for a while, because it's definitely a lot different, but there's a lot of barbecue spots to check out. That's for sure. But Morgan, it's been great to have you on the podcast, and yeah, really enjoyed our conversation.
Yeah, thank you so much, Matt. Really enjoy the conversation, and thanks for continuing to provide exposure to what's going on in Austin and beyond.